Good morning, everyone. Gonna get the bell here in just a second. Hope everyone had a great weekend. As you know, trading futures involves risk. It's not suitable for all investors. The information in the presentation is for educational purposes. It's not a trade signal service, not intended to be financial advice. As I said, I hope you had a good weekend. Hope your summer is happening. Lots of fun stuff. I am on my way this week to Chicago for the Traders Expo. I'll be speaking on Friday at the CME, and then a week from yesterday, Monday, at the actual expo. So lots going on, and a little bit of traveling as well. Now today we are opening not just below yesterday's low, but the low from Friday. And that's important because yesterday was an inside day, meaning the high and low from yesterday are encompassed between the high and low of the prior day, which was Friday. So anytime we can get outside of a range like that, where we traded within the prior day's range, or anytime we can get outside of the prior day's range, if it's just a traditional day from the previous day, that's a good thing. Because the closer we sit to a prior range, the more likely that there's not really going to be a whole lot of movement. Another thing to note was on Friday, we came up and got very close to the high from all the way back here in the middle of March, that 2807 and a quarter. And so by breaking that would be very significant because it's really the last high before our all-time high at 75 and a quarter. So we've got some good levels above us that, if broken, could really continue the acceleration. And there's a lot of good momentum right now in terms of, it's summertime. People are typically in pretty good moods. People are spending more time, doing things outside of work. Just getting outside in general helps to lift people's spirits. And so a 93 up to a 75, that's 70, 75 points or so. It's not that big of a move to take us to all-time highs. And if we break this 2807s, we could go to 2875s pretty quickly. Now today, market breadth opening fairly balanced, 1.2 to 1 and a minus 300. Gapping down slightly, but then moving up initially. The overnight here, I've got just a couple of things drawn. We were trending lower, pretty nice steady trend, slightly lower. And we had a couple of short setups that traded at their 50%. This last one didn't quite make it to the negative 23, very close, but I went ahead and draw up the next one just to see if we hold the 50, and then at the opening bell here, now we've started to break it. So I'll just start removing these. I don't put a ton of weight in the overnight, and I'm not really trading these levels just because I'm sleeping. I used to wake up a few years ago. I stopped this, but I used to wake up around 1 to 2 a.m. Central Time, which would have corresponded with the European Open, and I try and trade the European session, and then I wake up and then go back to sleep. So you gotta trade the NYSE Open, and then you gotta get to bed early. You're talking by 8 p.m. and then wake up again at 1, trade the European Open for a couple hours, go back to bed, wake up again at 637, trade the pre-market, and did that for a couple years. And after a while, it starts to, you have to be so regimented. And what I would do is try and schedule my time, my sleep schedule, so that I'd wake up on a 90-minute increment, and typically, give or take, 5 minutes or so, the human body typically runs through an entire sleep cycle in about 90 minutes. So I would, try to sleep for 3 hours at a time, 4.5 hours, 6 hours, 7.5, 9, any 90-minute increment. And that was really helpful to, even though I wasn't getting a long chunk of sleep, they were broken up into smaller chunks. Because I was waking up on a 90-minute interval, I was feeling pretty refreshed. But after a while, more so just the regimen of having to get in bed and go to sleep, around 8 o'clock got to be a little bit too much. So then I scaled back, stopped trading the European session, and then slowly started scaling back my intraday session. So it's just tailored to the morning. So on the left chart here, let's go to a 30-minute. I've got just the trading hours only, whereas on the right, you probably noticed in my little studies tab, style setting, I've got the show extended hours trading session. If you go into the settings, I know I get this question a lot. If you go into settings and you go under futures, well, any of these little arrows next to the setting box, if you just push that arrow, it will add. So see how this one's highlighted, show extended hours trading session? That adds a shortcut to the dropdown. And so you can have a list of checkboxes that you might use that you would want to turn on and turn off. So I'll just, turn off the trading, the extended hours, and then I can just turn it back on very quickly. So on my 512 chart on the right, I'll typically leave it on for the first part of the day, in the first 15 minutes, and just sort of, kind of getting a read on, okay, what's the market doing? How fast is it moving? Are we inside the prior day? Do we have a gap? Are we adhering to a series of shorts? Are we adhering to a series of longs? Meaning, are we trading at the short, moving down, trading at the next short, moving down? Or are we just sort of moving sideways, not really going anywhere? Over here on the left, I like to toggle back and forth between a daily chart, be a 5-minute or a 30-minute chart, and I'll just leave trading hours only on. So I'll hide that extended data. That way I can see the gaps a little bit better. I can see, like in the last couple of days, we've traded, if I just kind of hover a horizontal line over these 3 days, right around that 2800 level where we've run up to it, hit our head on it, and then we've sat on top of it, 2800, and then once again we've bounced up to it, and that is helpful just to kind of get an idea of where that popular trading area has been, the equilibrium, and then relationship of where we are right now. You can see, well, we gapped down, we moved up a little bit, but we're still below that range, coming up to the bottom of Friday's low, and then what would be sort of the bottom value area from yesterday and the Thursday. So, I don't like to get too carried away with 10 different charts on my screen that all have to do with the same market, and they're like different time frames, 5-minute, 15, 30-minute, hourly, daily. And if you try and wait for all of those time frames to line up, there's a lot of short-term momentum that's happening on the 512 tick chart, where you'll get 2, 3, 4, 5-point runners, 5-point moves, even in the context of a opposite trend. So the 30-minute might be down, and we might have a bounce on the 512 for 3-4 points. And you can capitalize on that even if the daily trend or the 30-minute trend is going in the other direction. So I kind of use the first 15 minutes to just kind of get my bearings, see what observations I can take in. Like on the NASDAQ here this morning, I'm not seeing a whole lot in the overnight. If I turn off the extended hours, I can come over here and say, okay, well, we sold off into the close yesterday. Had a little gap down here, and if I draw from lows and find a high point, we can say, okay, well, the market has not made a pullback yet, so it's likely that at some point in the next 20 minutes or so, we'll get a little bit bigger pullback to what would be the very first touch of a 50% retracement from just trading hours only, low to whatever the highs end up being, and can do the same thing on the ES. I've got a few drawings carried over from the overnight just because we stopped at the short. I drew up the long. We sort of traded at it, bounced slightly, and then broke below it. So I'll just get rid of that. But you can see how the ES is much more sideways compared to the NQ. If we take a look at the YM, kind of the opposite, the most bearish, where we've sort of didn't really have any gap, sold off, and we have not bounced yet into the first 50% retracement. So 3 different markets, 3 very different conditions, up, down, sideways. Pretty low volume in the last few days on the S&P. Same with the Dow. Now, if we look at the S&P, notice how this current, you could call it this current top, this current swing high, this current consolidation, these last few days are trading higher than the prior swing high back here in June. Now, if we go to the Dow, we can see, wow, a lot more of a head and shoulders potential where we have the current swing high here where we're trading consolidation is lower than the previous swing high. NASDAQ is trading above it, and the Russell is sort of double topped at it. So I would say the NASDAQ is the strongest at this point. The Russell was trending the strongest, and it's still, close to the strongest here, but definitely showing some signs of potential rollover. Notice on this last move down here, we had increasing volume. That's something I always look for. And if we take a look at the VIX, VIX is currently trading near the low from the 7th of June, right down here, and near these lows of all through the middle of June. So then if we come back to the S&P, we can see, okay, middle of June was right around here, and the S&P is trading just above that. So that lines up with what we're seeing on the VIX. If the VIX was spiking here, then I would expect a much bigger rollover. If we break the VIX high from July 11th, I would expect that to correspond with a break of the S&P low from July 11th. So that's how I use the VIX to kind of give me an indication of, okay, the market is selling off a little bit. Are we likely to continue, or is this just likely more of a fake out? We have a high tick. It's not very high, but it's currently the high tick of the day. I would expect that to break here even momentarily, but Just making a note of that. The breadth and the advanced decline line pretty much where they've been all morning, so nothing too exciting going on there. I'm trading a little bit lightly this week just because I have kind of a shortened week traveling, prepping for the CME and Traders Expos and things like that, so I don't want to be put on a whole bunch of new big positions and especially swing trading positions, and have things to be managing, especially Friday, Monday, and be tied up most of the day. So be able to do a little bit of monitoring, and that's about it. So and it's good to have periods of rest like that, more so mental. If you are planning vacations, it's okay to take a break from trading, and it's almost I would encourage it, especially through the summer at times. Pick a rollover week or pick a time in July or August and take that vacation and enjoy it, and don't think about trading. And your subconscious mind is constantly working, even when you're not actively feel like you're thinking about trading or a problem. If you haven't read the book Peak Performance, I pull a handful of anecdotes and pieces from that book, and I'm using some of that in my Traders Expo presentation. But it's just a really great book about how to become a very, very high level performer, whether it's in business or in athletics. There's a lot of ties, obviously, in trading, real estate, anything like that. A lot of ties together between the two: sports, business, entrepreneurship. It's all good stuff. So we've got a high tick at highs at yesterday's low. If we come down and break this little swing low here from a couple minutes ago, we're retesting. We've seen this short trade a couple of times now, 27.95s or 94s rather. This is the third time it's traded. Now we've traded at it at a high tick. So now if we can come down and break a swing low, just take a short off that level. It's basically a double top from the trading hours only, and see if we get a little bit of a rollover here. Fairly slow movement to the morning. There was housing starts, I believe, at the top of the hour. The last couple of days, the ranges have been 10 points, 13 points. So not a huge range, kind of in a quieter time of the summer. We're getting down second half of the summer, I would call it, just being after 4th of July holiday here in the U.S. And then with most kids going back to school in August, this time up until mid-August is kind of that last dash for taking vacations, and so things can slow down a little bit. On the swing trading front, ranges have also been pretty tight. Google broke its prior high and has been in a nice little rally, small pullback, another small pullback. So an opportunity here to get long above the high of the lowest bar in the pullback. So currently let's say today's high stands at 1180.60, then tomorrow, if we break that high, could use that as an entry into Google. Amazon, the same kind of thing, a little bit stronger push. I'd like to see a few more days of pullback. One day is not typically enough to warrant an entry. So see how the market now, the ES, has broken its prior high. It did not break that swing low I was talking about that would make for a nice little short setup. And so if you were to just come in here and maybe you notice, okay, we've got a high tick. And it lines up with highs, and we're at the 50% retracement. If you were to draw up that short, we'll just take this 2-candle pullback here. You can first start by saying, well, man, that distance between the 50 and the 60.18, I mean, we're barely a point. That's a pretty small move as it is. We didn't break a swing low yet. And so because it's a very small move and we didn't break a swing low, I'm going to wait for a little bit better opportunity. Wait for that to widen, to open up a little bit, to break the swing low before taking the short. Now there are some cases where if it's a little bit later in the morning, maybe we trade up quickly to a high, we get a high tick at highs, and then we start to reverse, and we've gone straight up, so there's not really any pullback to break or any swing low to take out if we just go straight up. For example, like in the NASDAQ here, if we just were to come straight down, and let's pretend that we got a low ticket lows down here, well, there's not really a swing high to break. And so if we were to get a bounce and we had a low ticket lows, then you could just draw from lows to wherever we stop and take a long at the 50% in anticipation that the market's going to get a lift here. Such was not the case with the ES this morning. But by coming back to the fundamentals of swing highs and swing lows, that allows us to filter some of the trades. That's how I filter the trades that I take, just based on what is the current trend, swing highs and swing lows. So now we've got a situation where the high tick does not line up with the high of the day, but we do have a low tick right at the open that lines up with the low of the day. And typically those don't stand, but for the time being, we've got momentum heading in the upward direction. We've got a little bit of resistance above us from sort of the point of control in the value area where we traded a little bit more heavily yesterday and Friday. As you can see here, as we kind of come up towards that 2800, we'll call it, and kind of come into yesterday's range. So until we break a swing low, I'm not going to be taking any shorts, because a swing low would be the definition of the break of a swing low would be the change in trend. So if we don't break a swing low, we haven't changed trend, and then you ask yourself, well, what is the current trend? Higher highs and higher lows. The current trend is up. So just like the football analogy of getting back to basics, the fundamentals, it all starts with trading. It all starts with identifying the trend. And you can better identify where the trend is changing. Very horizontal on the YM in the last couple of days. right around the 25,000 mark. If you will be at the Traders Expo this weekend, particularly Monday, I'll be at the expo all day. Please shoot me an email. I know there's a few folks that I've chatted with who are going to be there. I am speaking, I believe it's 1:30 in the afternoon on Monday, and that'll be just a 40-minute presentation, but I'll be able to hang out for a little bit after that and chat. Always fun to meet folks and continue conversations that we've had over email in person. .5 minutes. We've got the housing starts number, and I believe that's it for this morning. Yeah, Jerome Powell speaking also. Thanks, Terry. Typically, those don't have a huge, don't cause huge market swings, but always good to know when certain folks are speaking. You can see that low tick from the open taken out here. Another good way to use the NYSE tick is just in conjunction with entering at your 50% and looking to enter at a 50% when we're in a relatively low tick. So let's say you were setting up in a long, looking for the ticks to kind of move down briefly to relative to where they've been as you place that long. We're placing a short as the NYSE ticks might be moving up briefly. So let's say you were over here and saying, oh, well, I'm looking at this as a short right here. Well, what were the NYSE ticks doing? They were moving down. And so by placing a short as the NYSE ticks move down, you can kind of assume that there's going to be a little bit of a bounce, even if it's only a point, a brief bounce. Well, if you're shorting and the NYSE ticks move down, so what are they going to do following? The market's probably going to move up shortly, and that's just what we're getting here. Well, that's not a very high probability setup. Another high tick. I would expect the 2800 to be sort of a magnet. We should be able to get there fairly easily. But here is a high tick. Does line up with highs. We haven't had what I would call a trading hours only long, after the 15-minute mark, where we go from lows to highs as our anchor points, and then we pull back. So I would expect somewhat of a deeper pullback, maybe at the 9:30 mark, an hour into the day, or somewhere, sometimes at the top of the hour. Yeah, always a good observation, Dennis, when we enter into the prior day's range or the prior day's value area, especially when we have a couple of days stacked on top of each other and those value areas overlap. Shows that there's been a lot of agreement by traders that this is where they think price is valued at. Potential double top up here. High tick lines up with the high price. The most recent long setup would be or the most recent low, prior low to high, would be a 96.50 or 75. So if we could just come down maybe a few ticks further, it'd be great to see us go to 95, 75s and break the 61.8. But if we could just trade in a little bit through this potential long setup, then a nice short setup could be present. At least, something that might take us down into the full halfway back from the day. So if we had a short setup that then sold off, maybe we'd end up getting a bounce down here at the trading hours only, sort of on these highs of the morning. Very small at the moment. There's our little trade into the 50, so a 96.75 and then some. Great. So 96.50 potential short here, and I would take that short down, try and ride it down to the long, and then see what the reaction is there. I like these little double top setups that correspond with a high tick. Not to say that a double top or a double bottom will lead to a reversal every single time, but it's a very strong setup, so we'll see what we get. Almost a triangle pattern here on the 30-minute chart, and sitting sort of on the bottom, well, drag from here, bottom of the underside of the range almost, like this. Oops. Thereabouts. So we are on the underneath of this lower trend line. Touched 50s, didn't trade through it. No real change to the housing market index. Small lift in the nicey tick as we traded into that 96.75, and you can see, already down to 96. So, about a 3/4 of a point, almost a point now, reaction at the 50. So just by kind of keeping your eye on the nicey ticks, it's a helpful way to get in trades that are likely to have a, initial reaction, get away from your entry by a point or so. You always need to come down and break the swing low if we're going to get any traction or momentum to the downside. So getting in is really just the beginning. Managing the trade, always using that stop at the start of the trade I use 6 ticks, as you know. It's small enough to where, a 6-tick stop isn't really going to hurt you too much. And then when you flip it around and say, okay, well, what would it take for me to get a 6-tick winner on a trade? Well, that can happen pretty quickly. Just here, the distance 96.50 to a 95s, that's 6 ticks in itself. And so being comfortable with a full stop out before you even place the trade is important, because that kind of helps shape your emotional state throughout the trade, and just being able to clearly manage the position. It shouldn't really matter if this individual trade works out or doesn't. You're going to have hundreds and hundreds of trades over the course of a year. Even if you're only taking 2 or 3 trades a day, sometimes 0 trades a day, you'll still have plenty of opportunities. So if you get scared in these situations where, price, I was up a point and now it's back to break even, and now, well, what if it goes against me? What if I take heat on the trade? Then you end up micromanaging the position and getting afraid, tightening your stop for no reason, as opposed to, here's the ticks moving up into a high tick again here. We'll see if we can get a bigger snapback, meaning move to the downside, or if that this trend line here, if we break through that. But either way, the risk is small enough to where you can take these stabs at the market and have good reward to risk. And all it takes is one trade to go, 3 points, and you easily cover the losses of a couple of losers. So kind of setting up that framework is a really good way to give yourself confidence and peace of mind. And if you look at your trades, and you've heard me say this quite a bit, if you look at your trades in groups, groups of 10 or 20, 30, that will help just filter out some of the outliers. Maybe you had a huge winner of 10 points, and when you're looking at your trades in a group of 20, well, that's going to stand out, and you can say, okay, well, that particular big winner was kind of an outlier. Maybe you had a trade where you broke your rules and you just got rid of your stop, and you said, oh, this trade's going to come back, it's going to come back, and you ended up with a huge loser way beyond your stop size. Well, when you're looking at your trades in groups, again, that outlier sort of stands out, and you can say, okay, well, if I could just, adhere to my stop rules and cut my losses, then I would really be able to capitalize on the winning trades that I have. Another thing that's helpful that I've noticed when I look at my trades, just if I list them and I don't necessarily separate them by day, I can see, okay, in the last, 5 trades, I had, a string of 3 losers and 2 winners. Or, I've been in this streak of, 6 losers, or I've been in this streak of 8 winners. And when you just list them in a column, it's much easier to see that and kind of spot some of those things. And then you can look at, okay, here's this chunk where I had 4 full stop outs in a row. What is that max drawdown? And you can go through, let's say you've just got a running tally, a vertical column of all your trades. You can just go through and find the biggest chunk of losers and the biggest chunk of winners, and kind of see your max drawdown. And if on average you only have 3 losers in a row, but then there's this one period where you have 6, well, then you can do things like limit your drawdown with a dollar amount, or limit the number of stop outs in a row before you kind of stop trading and take a break till the end of the week and come back. And it's that kind of stuff that I found makes the biggest difference in in the profitability of at least my trading. If I'm off a little bit on an entry, if I happen to get out a little bit early or a little bit too late, that kind of stuff. Yeah, it might be a point here and a point there, and maybe the occasional stop out, or if I get stopped out to the tick, that stuff happens, but it's not really in the grand scheme of things affecting stuff too much. Trade like this that's just kind of snoozing along. Maybe it works out, maybe it doesn't, but when I insert this trade into my list of 50, 100 trades, just kind of that running tally, just kind of blends in with the mix. If I would get rid of my stop and say, okay, I'm going to ride this thing out until we roll over, and all of a sudden, the market rips and I end up with a huge losing trade where I broke my rules and risk management parameters, well, that's really going to stand out like a sore thumb. And it's that kind of risk management that I found to be the most profitable thing that you can do for your trading. And it makes sense. The hard stuff is hard to do. It's hard to stop trading after you've had a day where you've had 2 losses in a row, for example, or a couple of losses in a row. You want to try and make that back, so to speak, but it's not always the right time to be making more trades. So you definitely get the sense as we kind of move back to the break even in the S&P to yesterday's close that there's this sort of pushing, pulling. This short being a great example. We had 1, 2, 3 pushes lower, but the bulls kind of being able to overtake the bears here. So that 2800 is not too far above us. And I would expect, more. We kind of break highs by a tick, get a little bit of a pullback, break highs by, maybe a point, pull back, hit a little bit bigger push here. But once again, breaking highs by a couple of ticks. I would expect the market to kind of chug along, making ever so slightly higher highs and high ticks, just because there's so much, I say so much, 3 days of resistance above us. And now as we come into this trend line, we may end up having a little bit of support as if the market pulls back, which first 30-minute range puts us right about here. So shorting at the top of the first 30-minute range, or getting long at the bottom of the first 30-minute range, always a good play. And then when we are noticeably through it, potential for bouncing off of it. We kind of had a little bit of both happening high ticks at highs, selling pressure from above, but then a little bit of buying pressure from below. On the weekly, you've got this bullish engulfing from 2 weeks ago pattern, and that long 2693s that we bounced off of the prior week is targeting 2844s. So there's definitely a lot of potential for us to break some of these last few swing highs. Really the one last swing high before all-time highs. Market coming back down to a 97.50. More big body candle weeks here in the past as opposed to these longer tails. Not that one's better than another, just a little bit more overall trending when you have these big body candle weeks. when you have the three markets, YM, ES, and NQ, sort of trading different directions, it makes for a little bit more a back and forth kind of a day, as opposed to when all three are trading in the same direction, can be a little bit more violent push in one direction. Starting to get a little bit of lift here at 97.50s, targeting 99.50s, at least for a first target. In the case of the little double bottom here, we broke above this swing high. We haven't broken high for the day, but anytime I see a double bottom, it's a potential to tighten your stop. An opportunity, we'll call it. Yeah, 97.50 long, Daryl. So anytime you have a short break, typically, the next trade is in the opposite direction. So if you have a long setup that fails, typically the market would set up then in a short in the other direction, as long as it's not some sort of continuation that sort of just made a little bit deeper pullback. Because if you think about it, if a short is breaking, failing at 61.8, then typically the trend is changing. So the long would be the first move in that trend or the resumption of that trend. So trying to get into the trend change as soon as possible is the best way to keep your reward to risk the highest. Definitely when the market makes a double top, it's a very strong opportunity to bring up your stop. So even though we haven't broken highs yet, if you want to tighten your stop, that 96.75s is a good place to put it. You basically cut your risk in half on the trade while still having the open-ended 99.50s above us. High tick here, so also a good opportunity to tighten your stop. Now, every once in a while when we get a high tick, you can use that as an exit point. Let's say you have 3 contracts on and you want to take one off in the high tick here. Yeah, that's okay. Tightening your stop, taking one contract off at a high tick, essentially, guarantees a winning trade or not losing any money on the trade. But in a situation where these high ticks are not very high, you don't need to. You're basically saying, well, I'm risking a point and a half, letting the market come down versus potentially gaining another point and a half. or more. So 99.50s trade, there it trades through. So typically that would be my first target, is the negative 23%. So unless we get some sort of strange thing happening, I'm always using the negative 23% as the first target. And so if you've got two, just taking one off at the negative 23 and then now trailing the second. With one, I know you've heard me say this quite a bit, you have to pick one exit method. And it can be, I recommend going all in, all out at the negative 23% target because it creates good habits. Taking plus 10, plus 12 with one contract, that you can build up some decent returns. But if you're gonna trail, you have to trail every single trade. And so now in the remainder of the position, again, another high tick at highs. Not quite. We got the high tick. Oh, yeah, we did. No, we didn't. It's a little bit off. So the remaining, if you had the two contracts, you take one off and your stop at 96.75s. You can do a couple of things. You can draw up the next retracement here, put your stop just below that, call it a 98s. You're kind of looking for the failure point. Where would I not want to be long anymore? Or where would this long setup fail? And that's where you're looking to place your stop. So if you want to go from a 96.75, basically just having your stop below the prior swing low, and move it up to a 98s, that's okay. You always risk the market coming down and trading to the 61.8 and then bouncing. So putting your stop just below that is a good way to manage your risk. But the prior swing low, sort of the conservative default approach, is still down at the 96.75s. And then it's just a matter of trailing your stop, managing your stop all the way until you get taken out. Kind of trading to the top of the downtrend line now. So getting some decent movement today, even though the range isn't super big. Gap down, moving to the top of the down trend line of the kind of the ascending triangle that you can really see here. Now, if the market were to make a new high here, that creates a very solid swing low. And so you can see how, you have your stop at 96.75s. All of a sudden, you put in a new swing low and break into new highs, and you move up to, 99.25. So, boom, 2 points, 3 points. You can lock in on these swing low moves by trailing swing lows with your stop. But first it has to break highs or make a double top. The swing high from the afternoon yesterday is at 28.01 1/4. Sort of right where the target of this long is. That would be really the first swing high break in the last couple of days here on the 30-minute chart. So it may just kind of be a slow grind. Like I said, it wouldn't surprise me though if we make a bigger retracement, something like now. The low to high pullback lines up right with the top of the first 30-minute range, which is great. Market can pull back. We get some support at the first 30-minute range, which also happens to be the 50% retracement. Take a long off that level, and then presumably break through these swing highs. That's one scenario that could happen today. So there's our double top. If you want to move your stop a 99.25 is that point in a low tick. Interesting. No bounce in the tick there, so more room to move higher. There's always room to go higher or lower, but sitting sort of right on that 2800 big round number. There's a break of highs. So confirming 99.25, that new swing low stop placement. So we've reached the same high from yesterday afternoon. Should be visible here. Yep. Right here. No high ticket highs, which means we could just keep making new highs on the day. And stop, just about where the negative 23 was. So by trailing your stop, sometimes you end up with that. Let's say you have 2 contracts or 4 contracts. The first half you take off at the -23, and then the second half, sometimes it's a little bit below where your first target was, but because you're trailing, you have open-ended upside and limited downside. So it's okay to get stopped out on the second half of your position lower than where the first half was, just because on the next trade you could end up with a big runner and you won't get to see that runner play out unless you've got contracts on that you can leave open-ended. So that's another reason why kind of shooting for 2 to 3 to 1 reward to risk, 2 to 3 points plus targets, targets that are 2 to 3 points away from your original entry, 97.50 to a 99.50. That's your 2 points, and just trying to get in that habit versus taking very, very small setups that might only have a distance between the 50 and the -23 of a point. Drawing up the next long does put the 50% a little bit just below us with the 61.8 below that. Typically this is kind of an hour into the day. As if you're going to get a pullback or a deeper pullback, it usually happens around now. And again, that low to high, trading hours only, lines up right at the top of the first 30-minute range. That is a great place to take a long setup, but we may not get there. And up we go once again. So we could call this 99.50s traded. It didn't trade through, but it touched 99.50s, and that target was 802 and a quarter. Nothing really to do with a stop, just because it double bottomed and stop was already at 99 and a quarter. But you can see I'm just kind of following the same very simple, methodical approach, regardless even if you're using a 50% retracement as your entry or not. You can use the same trail stop approach. You can even use it. I use it on daily bars. You can use it on intraday trading. You can use it on futures, stocks, forex. It really doesn't matter. Now that we broke the prior swing high, gives us a little bit more likelihood to make that pullback. And you break the swing high, pull back, trade it to 50%, and then get another push. You can see how that, if this high holds, the -23 is above the next swing high back. Another little double top that's just a tick above, but it gives a valid. If you move your stop to 2800, that's a valid place. And if it comes down and stops you out, you can't feel bad about that. And so anytime you have a double top or a double bottom where we don't break the swing high, it's a valid opportunity to tighten your stop. Slow morning, but decent nonetheless. Trending nicely. If we don't make the full pullback, we could, like back here on Friday, pulled back after 2 hours or so, and then move sideways. If we don't make a full pullback, we could just move sideways. New high, again, solidifies the 2800 as a valid stop placement. So as we continue on this morning, we just continue on as we've been, trailing your stop, currently at 2800s. If we make a new high, nothing to do, but if we pull back, make another new high or a double top, then you can just raise your stop again and just keep doing that until you get stopped out on this trade, and then look for the market to pull back to the full 50% retracement if we get there, but decent little morning. Not the speediest, but sometimes, trade, you can move a couple of points in a couple of minutes, and other times, spending 45 minutes or an hour in a trade, sometimes longer. It's not a bad thing when you're just managing the position, sort of playing with the house's money. That's why it's helpful to take a portion off at that first target so that lock in a little bit of profit and you can just continue managing the trade. So I think we'll leave it at that for this morning. I hope to see some of you at the Traders Expo. If you're not going to be there, I'll post the link on the homepage at the Traders Expo, on the E-mini Mind homepage under the Traders Expo information there. They'll be doing a live broadcast, I believe, streaming it live in a webinar. So you can catch it even if you're not in Chicago at the Expo. And I hope everyone has a great week, and we'll talk to you soon.